Simon with Trade and Perform Coaching, and the purpose of this video is to kind of give a basics of how to understand how to use the zone, and some of the background behind the morning trade reviews, and how I use the chart to gain consistency, and understand a little bit of how I approach the market in terms of trading and what I'm trying to accomplish on a day-by-day basis. So I think the most important thing in trading in general is the consistency factor. So many traders go from a process of large gains and then large losses, large gains and large losses, right? And this is one of the few businesses where people accept having 20, 30, 40, 50% drawdowns in their account. Even large accounts. People, I've worked with traders that started with $1 million and have ended up with $500,000 or $200,000 or $300,000. And this despite taking repeated education in different courses. And there's so much crap out there that the only objective of this project that I'm doing, meaning the trading coaching, the blog, and posting the on Twitter and StockTwits, is to help traders move from being frustrated, either losing traders or break-even traders, to consistently winning day in, day out. Part of that process that I go through is passing on a lot of trades that sometimes look good, right? My threshold is extremely high. I look for 70, 80% win rates, and I pass on everything else. Now, also to understand, this isn't my only trading strategy, but it is the only one that I talk about with regards to the public. Why? Because it's fairly easy for traders to learn, number one. It's a great base to start from to build your trading account, number two, right? It teaches discipline, and it lets you see the rewards relatively quickly of stacking profits day by day, week by week. I've been able to get traders out of the gate to become profitable relatively quickly. Usually in the first month I can get, I don't want to say I can get, but showing the traders how to execute the system properly, right? Their results are usually profitable fairly quickly, often totaling anywhere from 30 to 40 points, ES points in a month, right? And once they start to see that consistency build and build and build, as long as they stay with the discipline of the trading method, you can make a tremendous amount of money. If you never learn another type of trading, or you never take any more aggressive stance in trading, you can make literally as much money as you want to. Why? Because not only does the model provide a high level of consistency in trading returns, but it also provides the ability to scale that trade via the ES, right? Literally executing one trade, one contract in ES is exactly the same as executing 100 contracts in ES. And for me, I don't know about others, but the most attractive thing about that is that I never entered this business, and most traders I know that enter this business, they don't enter to make 10 or 20 or even 30% returns, right? We're looking to double accounts, sometimes triple accounts in certain years. And this is certainly doable, right? In a very base format. The drawbacks are, on many days, it won't provide a lot of trades. We're talking about 1 or 2 trades a day. That's all you need to win. However, right, if you're not in this purely to make money, right? Some people are in it for the social interaction. Some people are in it because they have gambling. They like to gamble, right? And they want the action of it in and out quickly, right? And some believe they have the mental ability to come in and out very quickly out of the market and distinguish when they're going to be able to get 10 points and when they're going to be able to get 1 point. My experience has been the opposite, is that it's very difficult to predict when you're going to be able to get 5, 6, 7 points, because that's far outside the normal rotation in ES. And but I can predict with a fairly high rate of accuracy when I'm going to get 2 points out of a rotation in ES and where I'm going to be able to get that rotation from, right? And so then I build that consistency. I lose the anxiety from whether I'm going to lose money or make money, because I know that over a series of trades, I'm highly likely to make money, right? And I stop to see those huge drawdowns, and I gain confidence in my trading. And then the dream that most people have of being able to trade for a living, right? And acquire all those things, the security from having a lot of money, the lifestyle from having a lot of money, becomes very doable. So let's jump into it. that's a little bit of my background in terms of how I came about this. I came about this method of trading 3 years of running a hedge fund, and so this is my chance to give back to y'all and help a few other people make some money. So let's see if I can get this started and help everybody make a little bit of money and understand how the morning trade reviews work and how to apply the knowledge of the trading zones. So with the trading zones, right, the first thing to know is when I say zone, right, you'll see when I bring in this, let's bring this in a little bit tighter, right? The zones are the entire area. They're usually color coded, right? That's from here up to here, right? I would view this entire area as one solid zone, right? Imagine the whole thing as being one color, okay? That's the first thing. So each level is solid, right? Visually speaking. The next thing to know is I determine when I say the front of the zone or the back of the zone is determined by whether we're coming up from above or down from below, right? So if the market's trading here, let's wipe that out. If the market's trading here, right, and it rotates down to this zone, the first time when it moves down to this zone, this would become the front of the zone, and this area becomes the back of the zone. So that gives reference to from the front or from the back. Opposite of that, right, is if we rotate from underneath up into this level like this, then this becomes the front of the zone and this becomes the back of the zone. So it just flip-flops. The zone, it always acts in terms of when I say support and resistance, right? The zone always acts as it's always support until it becomes resistance. And that means this. Let's say we open and we trade down into this zone, right? We trade up and we trade down, trade up, trade up, and we trade down, right? I never anticipate, right? I never anticipate that the zone's going to break. I may, and I'll discuss trailers in a moment, but I always assume that the support's going to hold until it gets below. Now, once we trade below, right, a zone, it now becomes resistance, right? Here, it's support coming from on top. Then when we come up from underneath, it's now acting as resistance. I'll assume that it remains resistance until such time as we trade back above the zone again, and now it becomes resistance, okay? I think that explains that concept fairly well and should help people understand when I'm sending out tweets or discussing in the trade reviews. The next concept is the first time into the zone, okay? And quite often what we'll see is when I'm referring to the first time into the zone, a perfect example of that would be this move here, which was right off the open, is a move up into the zone, right? The trade down into the white zone, right? This is the first time into that zone, which is right here, right? So my focus in my trade plan is on the first time into the zone and not the second and third times into the zone. The reason for that is that I know I have the highest odds of getting a 2-point rotation out of the zone from the first time into the zone, right? I hope I said that correctly. So a perfect example of that is if we look in this area right here, right? So what we'll see, and let's make this a little bit larger. Focus on this here. Okay, so what we'll see is on the first move into the zone, right here, we get a rotation out, right? In this particular case, we didn't quite get 2 points, right? It rotated from 1830.50 to 1832. It only gave us 6 ticks in this example. However, that's assuming you took it from the very top of the zone. if you took it anywhere from really 1 point in all the way to the back of the zone, and this is still all of this, right? This is all the first move into the zone, all the way down, right? So you easily attain 2 points from the back of the zone and 2 points from the middle of the zone, okay? The only place you had difficulty attaining that is from the very front of the zone. And on occasion, not always, but on occasion, you will not be able to attain 8 ticks, but it's a rare occasion, okay? Usually it looks quite like this, where first move into the zone yields you 2 points right down here, you get paid and you move on to the next trade, right? When I go through the coaching sessions, I explain and I go through the drills of explaining how to know when to take this 6-tick profit and when not to. But the gross majority of the time, I am able to attain that 8-tick or 2-point profit. And there's occasions when you have to call an audible, but they're very rare. And often when I can't get that 2-point rotation, I may actually assume to take the loss. Again, that comes into building an overall strategy as to how I'm going to handle it when I don't get my rotation. In this particular case, I might have opted, particularly the second time out of the zone when I was unable to get it, is to simply move the trade to break even and and just taking the stop even. I generally stick around for my 2 points. So what happens as we progress, right? This is the first move into the zone. This is the second move into the zone, right? And you can see on the third move into the zone, we actually break the zone and rotate down to the zone below, right? You can see that right here. So, and I'll cover some additional things that I look for. So on the first move, I generally don't need anything other than literally the first move into the zone, okay? On the second move, I generally look for tick divergence before I'll take the trade, and I almost never take the third trade into the zone. Well, occasionally with tick divergence, but I'm very hesitant. It's highly, the odds of the break occurring, right, increase with each move into the zone. And again, my focus is to consistently build my trade size. And what you'll find over time is instead of stressing yourself out trying to find more trades, if you'll just focus on the single highest odd trade, and then in like any business, right, what determines whether a business can actually make you rich or not make you rich, whether it's trading, a convenience store, retail, consulting, is the ability to scale. I work with a lot of people who are in a business where they make a lot of money as an individual, right? But they get capped out because as an individual, they can only earn so many dollars an hour, even if it's $250 or $300 an hour, right? That some doctors make. It's very difficult to accelerate out of that because you're only one person. You obviously can't level up your business in that fashion. Trading, particularly in the ES, but trading in general, permits you to increase that trading size without going through having to create an entirely new business model. And literally somewhere between 7 and 10 trades, I'm adding contracts consistently and have been doing so for years, right? And what that allows is very quickly, if you'll do the math, you start making a lot of money really fast, and with a high consistency and avoiding the large drawdowns, life becomes very, very nice very, very quickly. If you'll read my referrals in terms of our testimonials on the blog, you'll see the success comes quickly, and then it's just a question of leveraging up the size, right? So I think I covered this reason why I focus on the first move in, right? And then you'll also notice, right, the consistency of the pattern, right? We come right down here, and I'll discuss this in a second. We come right down here, right? We rotate up the first time into the zone. We get a rotation out of the zone down. Second time into the zone, right? You'll notice this. Second time into the zone, we traveled through that zone. It never gave you a rotation down, which is why I focus again on the first entry into the zone, right? On my charts, you'll see sometimes single points of interest on those charts, okay? These single points might be a point of inflection where we reject. Sometimes they're not. In this particular case, you can see where we paused on the 5-minute bar, but then we flushed through, right? This was gap fill, by the way, which gap fill means it's simply the close of the gap between where we opened and where we closed on the prior day. If you'll look at a good example where it rejected is right down later in the afternoon, right? We came up and we rejected to the downside. And so sometimes this works, sometimes it doesn't. I generally pass on this trade. It doesn't fit the parameters of a very high odds trade for me. I skip on it. Okay. The other thing that you'll look at is I'm looking for the market to get good and stretched. What do I mean by stretched to rotation? This is rotation, a natural rotation in the market right here, right? You can see the top is 1837, right? The bottom is about 1833.50. So 1833 would have been a 4-point stretch, a little bit more, 4 1/4. The average rotation in the US ranges from 4 to 4 1/2. It's gotten a little bit smaller over the years. So I'm looking for generally a stretch larger than this, and I vary that day by day. The point of the video again is to understand the context of the zones, right? The market, when I come into the market and I do the market preview, I'm setting context around the trade plan. And the purpose of that is twofold. First of all, it's to know, to get an idea quickly of what type of day we're going to have, meaning are we going to have a trend day, which I'll discuss in a second, or are we going to have a balanced day? And again, I'll discuss that in just a moment. The other part of the day you'll notice when I focus on in the pre-market meeting is what time of day I think that I think will stop trending or look for possible larger reversals or larger context reversal through the course of the day. Also to look for whether we will have the possibility of leaving trailers, right? And what a trailer is let's say I start the contract off with whether it's you trade 3 contracts or you trade 300 contracts, right? Either way, doesn't matter, okay? You'll notice that I'm always personally scaling about half at 2 points. Sometimes I scale the whole position, sometimes I scale half. And then as the market continues to roll down, for example, let's say I take a short here, right? Scaling half at 2 points, right? And then I'm tightening up my stop. The stop is where I'm going to eliminate my risk, okay? And I'll make a choice based on my trade plan here. I'll either move the stop down to net break even. That means I'll calculate, right, whatever profit I had from my first scale, I'll adjust my stop so that net on the whole trade, I don't lose any money, 0. I may pay commissions. Occasionally I do it for a tick to cover the commissions, right? Or my other choice is I'll leave the trade at break even net, meaning I protect the profit that I got from half, and I'll see if the trade will work, just leaving the profit as is. The third choice is leaving the original stop, right? Because you really think you got good trade location and that you might have a larger move, okay? So now that we covered that, right? It doesn't matter whether you're trading 2 contracts, 3 contracts, or 300 contracts. I follow that same methodology all the way across. The stretch that I'm looking for varies by day, and again, I go over that in the market preview, what I'm looking for. And what I'm trying to do is I am thinking like a guerrilla fighter, right? I know I don't have the ability to beat the Goldman Sachs's of the world. I don't have the ability to beat the JP Morgans. And I know that while I'm a smart guy, I'm not the smartest guy out there. And I don't have to be the smartest guy out there, right? I just have to be smart enough to know where to attack, right? And what I want, generally speaking, when I'm looking at an attack, right, is I want this market good and stretched, right? You'll notice sometimes when it's not good and stretched, right? Like for example, if I took this trade here, very small rotation from here to here, right? I ended up getting a rotation down, right? But it was small, and very quickly you'll see that we came back up against us and moved into the zone, right? And proceeded to go higher. Now you'll notice again, right? Once we get good and stretched up here, we do find rejection down for 2 points. Again, why do I focus on 2 points? 1833 to 1830 and a half roughly was this move, right? And that provided this, assuming that I'd taken this trade, which I did not, right? That would provide, it doesn't fall in the correct parameter. That would fall into my 2 points. I'd have my 2 points, and I would be able to move on. If I look at moving through the course of this day, right, you'll see that, again, this move into the zone here is not nearly as desirable, right? So even though we have a good stretch here, all the way up, okay, notice the first move into the zone occurred early in the morning multiple times, right? So this is not the first move. And you'll notice that while it gave a very small rotation down, right, it didn't yield 2 points from the front of the zone. It did from the middle of the zone, but just barely, right? And we ended up closing on the high of the day. The other issue I have, and I'll cover this in a minute, is I do not generally trade the last hour. Why? There's a couple things going on psychologically that make the last hour hard. First of all, you're looking at the end of day. You have a compression of time. When you have compression of time and you're trading leverage, meaning day trading margin, you know that you're going to have to make a decision relatively quickly, meaning the latest you can close that position, really with accurate volume, right, it's going to be 3:15. You can carry it till 4:15 Central Time, but most traders are looking at the 3:15 or 3 o'clock close, right? So when you put yourself in that type of time compression, right, you up your anxiety, you up your blood pressure, you up your heart rate because you know something has to happen now. You don't let the time work against you. Also, after 2 o'clock, the majority of the algorithms fire in that last hour, right? 80% is my understanding. I'm not an expert in algorithms, but I've been in the business a long time. I have good sources, and I know that 80% of all the day's algorithms fire in that last hour. So now I'm dancing with the computers, and I certainly don't want to have to fight someone who is smarter than I am in order to make money. The last piece of that is that think about personal performance, right? If you look at the military, if you look at anything that involves a high level of focus and concentration, how long do you think you can relatively focus through the course of the day? This is a long day, right? And assuming you've been up prior, right, trying to set up your day and prepare your plan for the day, right? By the time you get to the end of the day, your likelihood of making more mistakes occurs in the afternoon, right? The other area that I don't like trading in, if I can avoid it, unless I'm leaving trailers, occurs when I am looking at the middle of the day. That is from New York lunch, right, all the way till about 12:30 for the most part, 1 o'clock on occasion, right? And what you'll see is most of the time lots of small rotations through this course of the day, period of the day, right? And so ideally, we like to say to ourselves, well, I can handle those rotations, I can wait. But most traders, most, not all, are not the patient type. And if you're not the patient type, or even worse, you're a over trader, right? All these little moves, all they serve to do is entice you to make lots of little trades that tend to lose money. You can easily dig a hole in this period time of day, right? The other issue that occurs here is that, and the way that happens is this. Most traders are sitting on this, and they know that a move like this can occur at any moment, right? And so they're on edge. Again, I'm not referring to disciplined traders. Disciplined traders don't have this issue. Undisciplined traders are traders that have issues with constant drawdowns. This is where they have problems, right? So we'll push up a little bit, they cover. We push down a little bit, they think it's breaking, they short. They end up chasing these moves, right? Or they'll short the top of the range and be so nervous at the second time up, right? Instead of taking their profits properly, they end up covering for nothing. But you've spent a lot of emotional energy, which most of us have a limited amount of, right? You've raised your anxiety levels, and all of that pushes you towards a fight or flight state of mind, okay? And as you get later and later in the day, when you're in a fight or flight state of mind, it pushes you to make trades you wouldn't otherwise make. And all of us have experienced that trade where we go, when we look at it after the market going, what the hell was I thinking? And the reason for that is because often, from what I understand, they move into that fight or flight. My experience has told me is involuntary, and we end up making involuntary decisions that we wouldn't otherwise make in a calm state of mind. So I think I covered that pretty well. The next part that I want to address is why I don't take trades with small, quick rotations. Okay, and the reason for that is I have a very specific scalping setup that I don't share with the general public. I share with my coaching clients, assuming they can establish a consistent profitability pattern. It comes later in the coaching process, right? So there's a couple of things, and let's start with. Let's see if I believe on the 7th I had a pretty good set of rotations here, right? Let's see where we were. Go back into it, okay, good example. So one thing that you'll notice is that there's a couple of different types of days. The first type of day, let's go into balance day versus trend day, right? Actually, what I'll do is I'll cover that in a separate video because this has already run on over 26 minutes and you tend to lose people's attention after 26 minutes. So I'll do a separate video over range day versus balance days and their qualities. And I will also do a separate video on the white zone and how I treat the white zone. So for now, let's leave it where it's at. That's really the basics of what I do and how I do it. I'm very good at this. That's not patting myself on the back or hype or anything like that. That is just saying the truth, right? I am able to get my clients profitable relatively quickly. I am able to get them to teach them how to scale, and I am able to keep them, for most part, on a stable mental time frame and time warrant because of the other techniques that I use to reassert trust within yourself, reinforce trust within yourself. So it doesn't become a matter of trusting me and my work. I teach you how to do the work yourself and back up that state of trust, which is critical. It's very difficult to follow someone else because of that lack of trust that your brain is naturally going to have, because no matter how well you think you know someone, the thought always appears. Yes, I know this guy's a successful trader from the evidence I've seen, but how do I know it won't fail this time? And that's where I work with my coaching clients, both to be able to come up with the zones themselves, but more importantly, to be able to trust themselves to execute time after time and a high rate of efficiency with a low amount of stress. Anyways, my name is Simon with Trade and Perform Coaching. You can reach me at tradeandperform@gmail.com. You can reach me at, via StockTwits or Twitter. I won't answer detailed questions over StockTwits or Twitter because it's too hard to do with as few characters as we have. I welcome questions anytime. I appreciate your time. Remember, futures trading is not for everybody. It is aggressive. I'm not a registered investment advisor. You should speak with a professional before trading futures. You can lose all your money and actually quite easily. Okay, this is an aggressive form of trading. At any rate, everyone have a great day. I'm going to go watch a little football. We'll talk to you later.